Hey, what's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show, the show where we use technical analysis and intermarket analysis to get a good idea as to where the market may be heading next. If you haven't done so already, make sure to hit that thumbs up. We got a lot to discuss on today's episode. We're going to be talking about Apple, Amazon, and Google. We're going to be looking at their expected moves and also, obviously, the move that took place today in the market, which was a big one, up 1.5% in the S&P 500, almost tagging that dashed line on my screen. That right there is known as an expected move. It's what the options price in as far as forward-looking volatility, a future risk, so to say. This pink box over here just shows a couple key levels that the market's been kind of trading and pinging around. They act like magnets over here. We have 3,900 below us where you can see areas of support, 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 resistance, support, resistance, right? Support, resistance, support, support. Okay, so it's been, a very magnetic type level. So it's always possible to come back into that area. And then we have 4,200 up here, which you can see is many times where we acted as support, resistance, resistance, and so forth. And now we're not too far off that key level. Now, yesterday we talked about the expected move for the Fed day, which was today. And we were looking at a plus or minus 5 and some change dollar move. And you can see up here 411 and 401 and 10 cents there. And what took place? Well, take a look at this chart. Let's update it. Ba-boom. So we saw the day started kind of basic, had some chop, and then what took place was the Fed announcement right over here. And then we had the press conference and we had this fire ship type of move all the way up to where? The expected move. And guess what? We got outside of it and we closed back within it, right? 68% of the time. It works every time. Just kidding, that's a quote from a movie. Now, if we take a look at the SPY on the 15-minute time frame, you can see that the RSI got really burnt to a crisp here. Price is still, let me fix that. Price is, oh my gosh, what's going on? No. Price is still trading above the 5-day moving average, and it is inclining. So what does that tell us? It tells us that the bulls are still in control. Now, later, I'm going to tell you exactly what it is that I'm doing and how I'm managing my risk around this. But more importantly, let's take a look into the remainder of the week. Take a look here. This 6.32 right here for the SPY is telling us that we still have that much volatility left for the remainder of the week. We have 2 more trading days left, okay? We have tomorrow, which is a big earnings day, and we'll talk about that. And then we have Friday, which we also have like more macro data coming out, right? The jobs report and so forth. So going into the end of the week, we're still looking at a plus or minus $6.3 move there. Now, I want to point focus to a couple of key things to look at for. Okay, so this right here, this was when the Fed announced the Fed rate decision, and you can see I have this white line trading up. That right there is the the anchored VWAP. I keep saying the JWAP, the Jerome weighted average price, because that's when the announcement was made. So coming into tomorrow, I want you to just watch out for that specific line, because if price comes down underneath it, but potentially U-turns, you can buy back into the strength to see if we can come back up and hit this upper weekly expected move, which is at 415.11, or even the upper end of week potential expected move up there. Now, if it cracks down through it, take a look at this anchored VWAP. This is week to date, so we're well above it. So if we get a big smashing hit to the downside tomorrow, keep a close eye on this week to date anchored VWAP, because we might U-turn that as well, and you can buy strength back up through it. So that is a possibility, something that I'm paying attention to going into tomorrow's trading session. I want to point focus to the BP chart. The BP chart now is moving into overbought condition for the SPX. It hasn't been there, so I'm just calling it out that we are almost there. It's at 69.53. If we take a look at the Qs, this is what the chart looked like going into today's trading session, where we had a large expected move for Fed Day. How did that play out? We closed outside of it on today's trading session. You can see we got well outside of it and we started to pull back within it, closing not too far off of that, about $1 off on a $300 product. So the levels that I want to pay attention to going into tomorrow, which we'll talk about expected moves and so forth, is going to be the JWAP here, and then also the week to date anchored VWAP. So all I'm doing is anchoring a VWAP from the start of the week on the 15-minute candle. And then I'm anchoring a VWAP to when the Fed dropped that meeting, okay? So if price comes down through it, potentially look for a, buyback through sort of situation. Or if price breaks down through this, potentially play the U-turn there. Those are possibilities as it stands, something that I'm paying attention to. But once again, you know, I had a lot of long positions on, and I'll tell you what I'm doing, what I did towards the end of this. Now, this right here looks like the melt-up channel, right? So since the beginning of the year, 2023 was right here. We went sideways, and we've just been ping-ponging around this channel, right? So this channel for the year to date seems to be somewhat important. So earlier in the trading session, well, later in the trading session, we had a big green candle coming outside of it. We showed that before. I pointed that on Twitter. Came down to the bottom side of it, and you can see that we came back within the channel. The RSI is getting burnt to a crisp. PMO is still pointing straight up, so, you know, it could potentially start curling over there. This is not where I want to go long, but I'll tell you what I did here. While price was coming outside of it on a strong move, RSI was burnt. I had a lot of long positions on, so I started to trim them, and I started to update my risk parameters, and I also grabbed some protection against my longs because I don't want to just fully get out of them, but I also know that, hey, if I'm not getting out of them, do I really like want to not have any protection on those positions way up here as things are getting very extended? So that's how I played it, right? So it was great to be part of the move, but now it's starting to, like, you know, it's getting frothy. It's getting to the upper channel, and like I said over here, right? Update your risk parameters. It came down. Look at the 5-day moving average. It started moving up. Now I'm doing the same exact thing here. Can it completely rip up? Yeah, obviously. So what would I do then? I would just close out my hedges, let my products run, and I'd, you know, take a little bit more profits. That's it. Now, if I take a look at the Qs on the 15-minute time frame, $7.7 expected move for the remainder of the week. So that looks like this right here, this gray shaded area, which could take us down to around the week today anchored VWAP and below the Fed anchored VWAP right over there. On the upside, it can get potentially outside of the weekly expected move, okay? And then it could potentially come back in. Remember, 68% of the time, that's my 6, and this is my 8. This is a percent sign. It closes within this channel, okay? It's very accurate with the S&P 500. The Qs, it's pretty accurate too as well. You need really liquid products for it to be much more manageable there. BPNDX did move into overbought condition, 70.93 on the RSI, so it hasn't been there, and it's finally getting there. Now, one other thing to call out is the IWM. The IWM got outside its weekly expected move, and you can see that price closed back within it. So this is going to be one to watch. The RSI got really, really burnt up there, very frothy, and that's when I started putting on my hedges, was when this was way out here, when the Qs was way up here, and then I started taking some profits off the table. So, you know, it went in my favor. Woohoo. Now, if I take a look at the 11 sectors that made up the S&P 500, this is a little bit of a concern to me, looking at energy down there and then financials. On today's update, financials remained flat. They didn't even budge. So this is going to be one to watch because financials are a heavyweight in the S&P 500. Now, if the 10-year yield continues to go down, right, bonds go up, this could be a bad sign for financials and potentially even continue to be bad for energy there too as well. And that could really, you know, take the gas out of this S&P 500 rally. Because remember, the things that are leading the way have already ran a lot, and they're going to have to consolidate. They're going to have to digest or pull back at some point. And if we get these to continue to get hit to the downside, that can really hurt the S&P 500s. Now, looking into tomorrow's trading session, the big things after the close are going to be Amazon, Apple, and Google, right? The big three over there that are reporting earnings. Now, when I say the big three, if you look at market cap, you have Apple, you know, Microsoft, Google, and Amazon right there in the top 5. So yes, it's going to be a big one to watch. So how much can these potentially move? Well, it's always important to pull the expected move up, you know, towards the end of the trading session. But I'm going to just show you what it looks like right now. So Apple has about a 71% vol, and that's going to blow probably, you know, higher going into tomorrow towards the close, but we'll see. And we're looking at a plus or minus $5.9 expected move, which can take us to around that 52.50 and potentially down there at 140. So that's going to be a big one to watch going into tomorrow. And then take note that, like, all we're doing here is we sold off and now we're coming back and we haven't really moved anywhere, you know, in a month, right? So yeah, in 2023, it was a great start to 2023, but, you know, it was also a horrible December. And where are we? Well, we're sideways. We haven't gone anywhere. I mean, you can go back further to the left. Well, we're where we were in October of last year. Same thing with Google. So Google has a $5.42 expected move as it stands right now. Could take us up to that 200-day moving average, take us down there at around 95. And if you take a look at Amazon, this one has me very, very interested. $8.2 expected move, 137% vol, which can take us up to that 200-day moving average, which is declining still, and then also potentially down there towards that 97.50 range. So yeah, if we start moving up, I would start looking at this gap fill to this earnings expected move right here, right? They report after the bell, so you know there's a lot of risk involved, obviously, but perhaps that can create some opportunities intraday to trade. Now, if I take a look at the zones, this is something that I share with the swing trading community here. You can see that there's been a big change in the range here, the colors, right? So what does that mean? It means that a lot of the closing prices here are now towards the high end of the zone, which makes these light up red. So what's green though? Well, green is volatility, and that means it's at the lower end. So we have it closed at 17.87, so below 18 on the VIX. We have a low of 16.87 there. So it says 14% upside to 5% downside. So this tells me, hey, you know, this is why I'm putting on hedging, right? This is why I'm like taking some off the table, why I'm just managing risk, putting on a little bit of a short here just to manage the blow if we start pulling back, okay? That's it. There's not much more thought that goes into it. As far as the dollar goes, dollar has also got crushed. It has 0.2% downside, 0.02% downside, right? It closed at 100.83, and then the low is at 100.85. So why am I pointing out this? Well, the dollar has a very negative correlation to the S&P 500 and various other assets. So if the dollar starts catching a bid from these levels, or, you know, eventually catches a bid to the upper portion of its range, that could be when the S&P 500 consolidates and various other products. Even take a look at like HYG, high yield, right? High yield is, you know, very correlated to, you know, just heavy growth stocks. And you can see that the reading that we're getting here was at 76.76, and the high of the zone is at 76.94. And these are dynamic. They're always changing, but just be aware that we are getting some over, you know, extended conditions. So as I've already stated, what is it that I'm doing? Well, we're clearly in a bull market, or not, I should say that back, not a bull market, a bull trend on these shorter time frames. You can see that here within this channel. Higher highs, higher lows, okay? And we have a 5-day moving average that is inclining. So what do? Well, we got to remain bullish. So, but do you want to buy when it's extended way up here? No. This is where I typically look to start taking profits on some of my positions or tighten up my risk parameters. The same thing, like I said, I did right here. So now what do? Well, if it comes back down, you know, maybe we do another U-turn on the 5-day moving average and continues its move up. Maybe we consolidate into a flag and then we break out further. Those are all possibilities. It's all very important to play out possible scenarios of what may take place. And as it stands now, when it comes up here, what I like to do is, you know, tighten up my risk, you know, receive some of the profits, and then I wait for more setups to take place. It's, like I said, it's not overly complicated. It's not some miracle formula. Going into tomorrow, once again, I'm looking at these anchored VWAPs, looking to potentially do U-turn trades through them. And that's really it, right? That's all I'd be looking for going into tomorrow. I'm not going to chase it up. And if I do get a move that goes further up, then like I said, I'm going to just remove a little bit more off my current long positions. That's all I got for you on today's episode, everybody. Hope it helped out. See y'all later.